What's going on, guys? Brian here. Today's Monday, January 8th, 2024, and the market has just closed. Now, I wasn't originally planning on doing a video today, but I figured I'd hop on and try to record one as fast as possible. I'm not feeling well. Turns out I actually tested positive for COVID on Saturday. Haven't been feeling well for about a week now, and I decided to finally take the test just to see if I was okay. Turns out I'm positive. It's not as bad as how it was back in 2020. It feels more like a cold or flu or something like that. So if you've discovered this YouTube channel back in 2020, 2021, you know I've mentioned a few of my favorite day trading strategies that are all comprised around VWAP. In this case here, we have the 2-day anchored VWAP more specifically. You guys know I love the standard VWAP that ships with any trading platform, but the 2-day anchored VWAP just adds a special ingredient, and I don't think there's anything simpler for a trader. I've done a momentum-based trading strategy before. It's probably one of the reasons most of you started following this channel back in 2020. I'll just switch over to this panel here, and this is that 3-minute time frame with the 9 EMA VWAP crossover. If you're not sure which video I'm referencing, it's this one right here, the simple day trading strategy. It was the 9 EMA VWAP cross, and that's what we had here today. When I did that video, I left out the 2-day anchored VWAP if I remember correctly, and then after that I ended up doing some other videos just on the 2-day anchored VWAP. This one is going to be a little bit more simplified. The video I would highly recommend you guys check out to fill in the details from this one, it would be this video right here. So why does the 2-day anchored VWAP work so well? These two videos are essentially going to elaborate a little bit more on what I'm covering in today's video, but this is that 9 EMA VWAP cross, and this is that 2-day anchored VWAP. It is a gap up after a downtrend. So if we zoom out, let's go to the 15-minute time frame, and we take a look, what has the SPY been doing? We have been in a downtrend. What did we have here today? A gap up over the 2-day anchored VWAP. This is going to surprise a lot of shorts from last week that are overly bearish. They end up being in trouble. That is not what any short that built a position last week, specifically on Friday's power hour, was expecting. If you trade the futures market, or if you take a look at the futures from pre-markets, you can actually take a look at what's going on with price action for pre-market. So you can start coming up with an idea. This is the 2-day anchored VWAP on the futures. This price action right before the bell is showing there's pressure building up here. Here is VWAP. Price is rising. VWAP is rising. The market opens and price is above VWAP. This right here, if you are an opening drive scalper or you like to take very quick trades, my playbook now is comprised of this being the only opening drive scalp at this point that I have confidence in taking without hesitation. The criteria or the ingredients for this, and these days I mostly trade the SPX, so I'm not paying attention to most other tickers like I did when I demonstrated in this video. I believe I provided over 5 examples from some of the high beta stocks like Nvidia and Apple. But if we take a look at this right here, this is our SPY. Let's just take a look at price action with my extended hours turned off because I don't really need to see them after the market is open. I already saw in the futures what's going on. The market is now open. Boom, the SPY is above VWAP. Without hesitation, the trade I'm looking to run is something that's long delta. Back in 2020, my style was more comprised of just buying out the money call. So in that case here, I could just buy the 470 call, and the expectation would be price is going to head towards 470. It is a high open interest strike. It is a strike that had a lot of volume. Whatever the reasons are, I'm going to leave out of this video as I want it to be a little bit more concise. The point is, guys, downtrend. Markets then gaps up over the 2-day anchored VWAP. It is not going to work out 100% of the time. Nothing is going to work 100% of the time. The point is your risk is small. Where is your stop loss? Take a look at price action as the market opens. Your stop can be right below the 2-day anchor VWAP if price closes. Use a smaller time frame if that's your style. A 5-minute candle. If a 5-minute candle closes below the 2-day anchor VWAP, or you don't like the price action because it drops too far below the 2-day anchor VWAP, take your stop loss. It won't be that bad. The risk reward is generally going to be worth it. It's not always going to be a day where we rally this much, but more often than not, take a look at how bad were the previous days. How the market was down here. The market ended up closing green on this day, but it was a gap down day. So this is a red day. The market was also red here. The market also was down here. The market was also down here. That is 1, 2, 3, 4, 5 days. And this is 5 days compared to the previous days. So within a couple of these days here, you'll see a green on the daily time frame. That is not what I'm referring to, because yes, it might have opened here and then closed here, and that's going to show up as green on your daily time frame. What I'm referring to is from the net change perspective. Here, the market closed here. The next day, it closed down here. Then the next day, it closed down here. Then the next day, it closed down here. And then it finally did. Yes, it closed a little bit green on Friday. So this is a first indication or first sign that something is changing. If we take a look at the daily time frame, you guys will see this as a inverted hammer. And that's also something that you'll see at the end of a downtrend. But even if you didn't pay attention to that or you didn't catch that on Friday, it is irrelevant. You can keep it simple. You don't even really need much prior context. The point is downtrend. The more consecutive days the downtrend, the better, because it means this is our trend. Shorts are hitting it here. Shorts are hitting it here. Shorts are hitting it again here. Maybe they have a secondary trend line. They're hitting it here. They're hitting it here. They're building up a short position. The expectation is the market is going to keep going lower, but we already know trying to short the SPY over the long term is not a consistent strategy. The market is green more times than it is red. The VIX, I've done videos on this, implied volatility comes down over 75% on a Friday into a Monday. Mondays have been one of the most bullish days in the markets for the past 50-something weeks. If you check out any statistics, any analytics on that, the year is 2024. Take a look at 2023. Take a look at what the market has been doing on a Monday. It is now at the point where I don't even think about shorting the SPY on a Monday. If the market goes down on a Monday, I just sit on my hands or I try to take a sideways choppy type of a trade. As I said a video live just this morning discussing last week, Tuesday, the market was closed on a Monday, so it practically counts as a Monday. But in this case here, if you're struggling to find your footing at the start of the week, if you're a little cold after not trading on Saturday or Sunday, and you find that Mondays are days in which you're struggling, maybe just focus on the SPY and look for some sort of bullish setups. Look for bull flags, look for bull pennants, look for inverted head and shoulders, whatever technical patterns you want to look for. Maybe just try to look for some sort of long setups on Monday. It won't work out all the time, but the way price action has been on a Monday is more times than not, the market's going to go up. This video is about this downtrend with a gap up over the 2-day anchored VWAP. It has been working for years. I don't see a reason for it to stop working unless shorts find a way to close out their positions without buying it back, but that is in a sense impossible. The very nature of a short closing their position is by buying position back. Once key technical levels break, then bulls know it is now safe to start getting long. In this case here, this is a trade that I ran today. I jumped in a broken wing call butterfly, and we're going to cover a little bit of GEX in a second. But if I just were to jump to the QTA chat and we head to here earlier in the morning, this is a case in which I'm just demonstrating or showing the trade in which I took here today. About 20 something minutes into the open, the trade was up about $2 or so. And then at this point, it has no upside risk. Years ago, I would have just bought a long option, but now I prefer the broken wing butterflies for my 0 DTE strategies. Now for additional confluences, other things that I will be taking a look. If you guys have been paying attention to the most recent videos, you know gamma exposure is a tool that I use daily. It is something that I pay attention to. This is the gamma exposure around the time in which I shared that trade. I took a look at this, and my thought process at that time was that the SPX is unlikely going to close below this area here at this point. So that's where I'm starting first. Max pain for the 0 DT is 47.10, because now that price has gotten over this, I'm going to expect this strike price to act as some sort of support. It's only if it gets back below it will I then change my mind. But as long as it is above it, then I'm going to have a different thought process or bias. It doesn't matter what I might have thought prior to coming into the day. In this case here, I was already in a long trade that was working out pretty well. But the reason why I'm showing you guys some of this is I ended up taking a losing trade later in the day. I'm still in the trade. It's a swing trade, so it's not going pretty well right now. I'll probably end up realizing a loss tomorrow. At this point, I'm just trying to mitigate my losses, but I figure I'd share this part in this video here as it's a little bit important. Also, As I see this, and I notice that the 4720 strike is pretty strong here on the gamma exposure. This is the positive gamma. I took note of the 4735 strike at this point because it seemed pretty significant. The blue in the background is showing all the call volume for the 0 DTE strike. So there was a lot of call speculation happening here, and this strike caught my eye. I was like, okay, this is pretty interesting. These two were a little too far out for me to really be worried, but I did know at this point here, this is where the positive gamma just looked pretty dead. So this is a pretty healthy, pretty strong, pretty brolic positive gamma by my book compared to the negative gamma over here. The negative GEX paled in comparison. If this is the highest negative gamma strike and it had just, negative 5 million compared to these positive gamma strikes that had close to 15 million, this is just a couple of them. You combine these two right here and you have over 30 million positive gamma between these two. Not that I'm calculating and doing the math. I'm just demonstrating for purposes. If the graph is not self-explanatory with seeing how large these are in comparison to this side, then you can use the actual numbers. 9 times out of 10, I'm not actually looking at these numbers unless the market has made a monster move, like a 2 sigma move, and I want to see how much negative gamma there is in the market to decide how aggressively long I want to be. That's a different story. In this case here, I'm just pointing out how large these bars are. This one caught my attention because at this point, it seemed evident that price would go to 47.20. The question was, how far would it go? At this point, I'm thinking 47.35 would, in a sense, be the ceiling, or this is where price would be choppy and stall out. I was not thinking we would go this far today, but I was aware of this. This is the strike I was paying attention to. So as I'm in my 0 DTE broken wing butterfly, I ended up just realizing this trade. Let me see if I have a screenshot here. So this is by the time in which I started closing out the last lot. This was 12:36 here Eastern time. I closed that out and it was up about $340. The max amount I think this trade was would be able to make at this point was 370, as long as price was above this strike price. So I said, hey, I'm up 340. I have no reason to think we're going to come back down to this area, so I'm going to close it. So I'm going to demonstrate why. At 12:30 at this point, let's scroll down to the gamma exposure as I was taking a look at this. 12:30, I noticed this. This caught my attention. That 47.35 strike was now very large. I was like, whoa, okay, that has really spiked. If we see it was growing earlier in the day here, here's that 47.35. It was growing. We were seeing clues, 47.35, it is growing. Earlier in the day, it was not that large. However, it caught my attention because it did stand out. That's a pretty far away 0 DTE strike, considering the market had already made a decent move at this point. This was already at 10:15. The market had been open for 45 minutes already. So to see a strike price up there with no real, massive news, it caught the attention. But as we see as the day progressed, this is that strike price right here. As we see it growing, it started showing signs a little bit earlier. It wasn't until about 12:30 that I thought, at this point, there's no way the market's going back down. I might as well close out of my butterfly and realize those gains. The mistake in which I made at that point was I decided to run a iron condor for the next couple days, and I used this gamma range here. So I figured at this point, wasn't paying attention to the 0 DTE to make my decision, but instead of jumping around in these videos, I'm trying to keep it concise. I ran an iron condor from here to here, thinking at this point should be the range here for the next couple days. Little did I know at that point that the market would then continue to proceed to rally all the way up to here for today. So in this case, the iron condor, if you are curious, looks something like this. A little earlier, market rallied to 47. We'll call this 47.60. This is 47.58, but we'll just call it 47.60. And you guys can see at this point, I'm down $640 or so on 4 lots. So I decided that I needed to come in and, do some sort of maintenance or manage this trade. So I closed out this put side and then I turned it into an iron fly. So now my current structure of my profile looks like this right here. So let me just turn this on so you guys can see. So I realized the gain from the put side for the iron condor. That ends up being a win, but obviously the call side is in the red. So overall I'm negative, but again, this is just showing the call side. I already realized the gains on the put side. So overall, so this is not how much I'm down completely. It's probably around $700 or $800 if I remember correctly at the time I made the adjustments. But now I'm just showing you guys what I did is now I opened up another put vertical spread right here, and it is just to bring in some more credits. The problem with doing these types of adjustments is now my probability of success is very low because I have a very narrow window that I need the SPX to maintain tomorrow. So yes, if we jump forward in time here, let's go to Wednesday, and theta decay starts eating away at these options, and let's just say implied volatility comes down and the SPX is still around here, then yes, I'll end up walking away profitable, but it's highly unlikely. So at this point, I'm not really looking for a win. I'm just looking to mitigate the losses, and I think that's something that's also important. If we circle back to price action, these are not the days that you want to beat yourself up if you are someone that did not see this coming. No one, in a sense, most of the time, to my knowledge, wakes up and says, hey, the market's going to make a 1.5% move, with no significant catalyst. The recipe or the ingredients for this type of move happening, however, will generally follow days in which there has been a downtrend and then the market gaps in the opposite direction. It works in the same case. If the market is in an uptrend and then it gaps in the other direction and it gaps down below the 2-day anchored VWAP, then the same thing is highly likely to happen. However, the market is more likely to go up. So that's why I focus these videos on looking for these long opportunities. On top of that, the reasoning behind it has been explained in the other videos. Pay attention to the volume profile. Look at these POCs getting lower, getting lower, getting lower. It's forming these B profiles. It is just baiting in shorts. It's just looking juicier and juicier. Once price starts getting above these value areas now, this is just showing from the volume profile shorts are in trouble. And if they are in trouble, they're going to start closing out their positions. The simple indication on your chart is the 2-day anchored VWAP. So if you don't understand everything else, you don't understand gamma exposure, you're not really that great at understanding reading price action, all that stuff yet, it is fairly easy to understand when price is going down. It's going down, it's going down, it's going down, and then all of a sudden it gaps up. And where does it gap? It gaps up over the 2-day anchored VWAP. The longer the downtrend, the higher the probability of this happening. It will not happen 100% of the time. Guys, I want to repeat that. It will not happen 100% of your time. A lot of times I know traders see a video on YouTube and then they go and run with it and they think this is the holy grail and this is how exactly they're going to trade every single setup and every single time. I'm sharing with you guys something that has been in my playbook for over 4 years. It's one of the only setups that gets me excited to take a trade as soon as the bell rings. If we head back here, let's see what other things which I had open. Yeah, so this is the trade opened 2 minutes after the market opened. Took me about 1 minute to plug all this information in, save it, just so I can log it for my journal, move right along. This is the Iron Condor. If I continue to hold the Iron Condor, down 152 bucks, as you guys saw, I'm in 4 of them. I save it with 1 lot just so I can track how the performance is with the Greeks with 1 lot at a time. And then in this case here, this is what I'm currently in. So after I closed out the put side, realized the gains, and then turn it into this Iron Fly. This is the Iron Fly right now. So being that I'm in 4 of these, this is in a sense all I'm looking for here. I mean, I'm highly doubtful I'll be in this thing by Wednesday. Obviously, there's still room to walk away with a really nice win, but the risk is going to be too high. So ideally, I would love to be out of this trade, as soon as possible here tomorrow. If this trade can bring in $500-600 tomorrow from where it is right now, then I'll definitely be happy with that. If not, if there's any type of trouble, again, I will be out the trade. So hopefully a video like this can help you guys and provide some context. And if you are one of the long-time subscribers on QTA, then you guys already know the 9 EMA VWAP crossover, and then you just trade the trend. Once these key levels break and hold, here's the break over 470. Here's the retest. It holds. Price gets back over the EMA, ends up trending with it all day. Only one, little slip right here, but at this point it's holding above this range. It's holding above Friday's high here. This is another potential break and retest. Here's a break. Here's a retest. Price is holding, and then it's just trending along the EMA. I don't have these tight EMAs on my chart that much anymore, but I have them up on another screen for reference if I ever need to take a look at them. They're great for trending days, and these are the days in which I'm expecting a trend to happen. So that's going to be one and the only reason in which I would actually even look at this. But I know some of you guys that are still scalpers, some of you guys that are only scalpers, this is just a reference to a video that I did back in 2020. Thanks for watching, guys, and hopefully this helps. Share the video, leave a comment down below if you learned anything, like it, and I'll catch you on the next one. Thank you.